If you need an easy to learn profitable trading strategy that works on crypto, you have come to the right place. In today's video, I'm going to be going over a very simple order block strategy that works in bullish periods of the markets and occurs quite often. This strategy is like a hidden treasure for me and I use it for most of my day trades in this current market. If you guys want to see more of these videos, then make sure to subscribe and like. Now enough of that, let's jump straight in. Okay, so how we're going to do this is we're going to start off with me explaining what an order block actually is. Then I'll show you 3 rules that I always use for using order blocks and trading with order blocks. And then I'll go into showing you guys an example and how to actually put your trade around an order block. So to start off, what is an order block? An order block is an area where there are many orders waiting to be executed from a large move previously. Now this can usually indicate some sort of reversal. I always have 3 rules for trading order blocks. Rule number 1 is order blocks are not a strategy on their own and they should always be used as confluence. Now what I'm going to show you today is going to be somewhat of an order block strategy, but what I always teach my members inside of the private Discord is that they should always use order blocks as confluence. Now what I mean by this is many people will find an order block and place their trade from the order block, set their TPs, stop losses quite randomly, and just hope for the best. You don't want to do that. If you're just spotting order blocks as confluence, what you want to do is find the order block, wait for the order block to get mitigated on a higher time frame, then move on to a lower time frame and find some sort of change of character that would indicate a larger move down or up. And then you want to wait for a candle close below that change of character, and that's when you can start to enter your trade. Rule number 2 is do not trade order blocks created from news. The reason for this is because news creates fundamentally driven price action. Now that is very, very different from technical driven price action. They are 2 completely different things. Technical price action is everything you see on the charts. So like your supply, demand zones, order blocks, fair value gaps, everything like that. And that's people trading from those types of analysis. And what a fundamentally driven price action is essentially news. So good news may come out, we may see a huge pump, and from that pump you may see an order block. Now just because there's an order block there doesn't mean that is real. That is not a real order block because it's not technically driven, it's all fundamentally driven. We always want to trade when there's no news and just pure technical price action. Next, we have always confirm your order block. What I see so many times is people finding random things that look like order blocks. They may see a large move up, a large move down, and then they'll place their order block at the top and at the bottom. That could be your point of interest, but that may not be an order block. Now, the easiest way to identify a full order block is how I do it, by using an indicator. Now, I know I'm probably going to get a lot of backlash for this, for using an indicator, but it's just so simple. There's really no need not to use an indicator. It will just make your life so much easier, and it will already be there automatically on your chart. So what I use is an indicator by Nephew Sam. I have no affiliation with this, and it is completely free to use. If you want, you can just search up order block here, and it is this one. So now we've gotten that out of the way, let's move on to how I actually trade with order blocks. So once you're on your hourly time frame, what you want to do is find the first order block. So right here we have a bearish order block on the left. Now the reason we're going to be using this bearish order block and not this bullish order block is because when we created this bullish order block, we were not able to break past the high here, but when we created the bearish order block, we were able to get past these lows right here. And we also had quite a significant point of interest right here that was holding a lot of buyers in, and we managed to break through that quite nicely. So let's go ahead and mark on our order block. Okay, so once you've marked out your order block, what you want to do is you want to get your Fibonacci tool and you want to drag it from the swing high or swing low again to the swing high or swing low. Here we are in a downtrend, so what we're doing is dragging it from the swing high to the swing low. Then what you want to do is copy on over these exact settings. After you've done that, you're going to be getting the idea of what we're doing very, very quickly. Once we've done that, we want to get the Fibonacci tool again, and what we want to do is drag it from the top of the order block all the way to the bottom. Now we want to disable every single thing apart from the 0.5 level. The reason we're doing this is because with the 0.5 level, we are getting our pinpoint entry and kind of our sniper entry in this order block. What the 0.5 level does is it allows us to get 50% of the order block, rather than the start or the end of it, or not at all any of it. So what I usually see a lot of people doing is setting the entries on the order block, something like this, and then the stop losses, just at the top here, and then the top take profits wherever, let's say at the swing low. Now, whilst this may give you a good risk to reward, it's not gonna. It may also hit your stop loss a lot more times than you're taking your profits, and it may end up being an unprofitable strategy. The main reason for this is because a lot of people trade on different exchanges and different brokers, and different exchanges and different brokers have two completely different prices, completely different spreads, and so on. Now, what I mean by this is, you can see here we are on the Binance exchange, and you can see here that price is at 1.57, let's say, just moving quite quickly. And here price is, you can see in the top left, price is moving slower on KuCoin and slightly different. If I take the line tool right here and go from this wick right here, you can see we are at 1.615. Here, if I take the candle or the line tool and draw it from the wick, we are at 1.616. Now, although that is a very, very little change, it could also be the change, from your stop loss being hit to your stop loss not being hit. So that is why I always try and enter off of 50% of the order block, and I do not place my stop loss at the top of the order block. What I do is I place it at the 1.05 level right here. What this allows me to do is have some leeway from the order block to the high, and I won't necessarily get stopped out as often, and my risk to reward will still remain very, very good. The next thing is our take profit levels. Where do we have our take profit levels, and do we just have one? No, we have multiple take profit levels. As you can see from the chart here, we will have 1, 2, 3, 4 take profit levels. How do I trim out these take profit levels? What I usually like to do is 50% at take profit 1 and set your stop loss to break even, 50% at take profit 2, 50% at take profit 3, and 100% at take profit 4. Now, you may be wondering, that doesn't add up to 100%. If you're trading on Bybit or Binance, any of these exchanges, you'll usually have to trim manually. So what I usually do is I just take half of the position off each time until we get to the final TP, and that's where I take off the full position and I'm not letting it ride anymore. Another thing I do to mitigate risk is, after we hit take profit 1, I set my stop loss to break even. After we hit our take profit 2, I set my stop loss to take profit 1, and so on until we hit take profit 4 and my trade is fully out. So you can see here on the coin OP, we hit our order block, hit our entry, hit our take profit 1, and now are on the way to our take profit 2, which is very, very good. This is a literal live example of the trade playing out. So now we've hit our take profit 1, we set our stop loss to break even, and the trade is riding out in full profits. That is essentially the strategy that I like to use for order blocks. If you want to learn more about order blocks and a few different strategies, you can check out the link to my private Discord, and that's where you'll get taught a lot more. Thank you all for watching. I'll see you all in the next video. Goodbye.